Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be discussing the cues from the FOMC minutes, the setup for the Nifty on expiry day after yesterday's big sell-off, and of course, we'll also be talking about the stocks in news in today's session. But before we do all that, let's take a look at the headlines at this hour. Well, the minutes from the Fed meeting show officials believe ongoing rate hikes are essential to fight stubbornly high inflation. Some members call for faster rate hikes. Wall Street ends mixed after the release of the minutes. Asian markets trade largely higher even as investors digest cues from the US FOMC minutes. The SGX Nifty too is indicating a positive start for the Indian markets. MPC members remain cautious on inflation and fear the recent drop could be due to a fall in vegetable prices alone. But two external members warn that the committee could overshoot its policy rate target. Jayant Verma says that the committee has become complacent about growth. After the big sell-off yesterday, what is the next level to watch out for on the Nifty? Will the market stage a rebound on FN expiry day? We'll decode that on the show. And stocks in focus today are Hero, Moto and Orion Cement. Well, let's shift focus to the FOMC minutes that were released last night. And to decode that, we're joined by Peter Cardillo of Spartan Capital. Good morning, Peter. Good to have you on the show. Well, first of all, the FOMC minutes point to rate hikes for a longer period of time. What are you making of the cues that are coming out of the FOMC minutes?
Yeah, there's no question about it, that the FOMC minutes confirmed what we already know, that the Fed is going to stay on course in fighting the inflation battle. And of course, there was a bit of a divergence among the Fed members. Most of them wanted a 25 basis point hike. There were a few that were calling for half of a percent basis point hike. And as a result of that, over the past several days, we've heard from voting members and non-voting members, one non-voting member, that they might be calling for a half a percentage point rise in March to get us closer to the terminal rate. But I suspect that they are likely to stay on course for a 25 basis point hike as they monitor the inflation news over the next few weeks.
Right. Back in December, the expectations were that the terminal rate will settle in around somewhere around 5.1%. But given the kind of economic data that we are getting, do you expect the Fed to actually push the rates to somewhere around 5.5% to 6% or thereabout by the year end?
I don't think they're going to 6%, but I do think they're probably close to 5.5%. The terminal rate now is targeted at 4.42. So it's very possible we can go to 5.5%. And of course, if they elect to raise by 50 basis points in March, then we're almost there.
What are the chances of a 50 basis point hike? A lot of these Fed members have come out and said that the Fed needs to look at a 50 basis point hike in the March policy.
Yeah, there's no question about that. And, it's all because of the fact that inflation remains stubbornly high. Although, if you look at both the CPI and the PPI, the year-to-year inflation number has been coming down. So there's no question that inflation is coming down, but we did have a period, a month or two, where inflation heated up again. And that was mostly due to energy. And so if you look what's happening in the energy prices now, you'll see that crude oil and gasoline prices have come down. So the next big test will be Friday when we get the PCE report. And I expect the year-to-year data to be off somewhat, which would confirm that inflation is on its way down, but still at elevated levels.
Right. In light of the data that we've seen last week, do you expect the U.S. economy to now look at a soft landing? Because we've seen the U.S. markets actually rally in anticipation of that till now. It's just that now that the FOMC minutes have come out, and over the last few days we've seen S&P under pressure. But till now, the expectations have been that the U.S. economy may look at a soft landing later this year. So, what are your expectations on that front?
Yeah, I don't think we're headed for a soft landing because there's no doubt that we've had mixed signals from the economic data. Retails are still strong, showing that the consumer still has buying power, and salaries have basically been going up, although at a slower rate. But if you look at some of the other sectors of the economy, such as housing, manufacturing, they're still in contraction, and housing is in a recession. So I think the chances of avoiding a mild recession is next to nil, and we're headed for one. And I say that only because once all the rate hikes have infiltrated the economy, the consumer is going to have to pull back on spending because the cost of financing debt, personal debt, is going up. And that's going to be a burden. And they're going to cut back on spending.
Right. Peter, what's your view on the dollar index from here on? It has rebounded and is around the 2-week high mark, if I'm not mistaken. Where do you expect the dollar index to head from here?
I think we can go to probably 105, 106. And that's based on further rate hikes. Of course, if the Fed should extend the campaign, let's say to 3 more rate hikes, then there's a good possibility that the greenback could move back up to its 52 weeks high that we saw in 2022.
Right. Peter, what's your view on the Indian markets? Post the budget, Indian markets have been stuck in a range, and yesterday we saw quite a bit of a sell-off come in. And foreign investors have also been pulling out funds from the Indian markets. What's your take on the Indian markets?
I think, the Indian market is following the U.S. markets, like all the other markets. They're basically focusing on the higher cost of money, and they're focusing on the Fed. Of course, there are other factors, but I think that's probably the primary reason why we saw a hefty sell-off yesterday.
Right. Which emerging market is looking attractive at the current juncture, Peter? When you talk about Korea, Taiwan, these markets have been witnessing strong flows from foreign investors now. Do you think compared to India, these are looking better investment destinations at the juncture?
Well, I think, India has been under pressure more than the other markets. So if you look at most of the Asian markets, they basically have been mixed somewhat. But again, they do have days where they're off anywhere from 1.5% to 2%. And I'm referring to the Shanghai market mostly. And if you look at the Nikkei, it's been pretty much following the same pattern, down about 0.5% to 1%.
Right. Peter, thanks a lot for taking out time and sharing your thoughts with us this morning. We look forward to having you more often on the show. Thank you. Thanks a lot for joining in.
Thank you for having me.
Thank you. Let's now shift focus to market technicals, and we are now joined by Jay Thakkar of Sharekhan on the phone line. Good morning, Jay. Good to have you on the show. Well, yesterday we saw a big sell-off come in. The Nifty slipping below that 17,600 mark as well. Sensex plunging somewhere around 900 points. What is the setup looking like today, given the fact that today is a monthly FNO expiry?
Hi, very good morning to you, Nandita. Yes, we did see definitely a good sell-off in yesterday's trading session. And this was very well anticipated as well. Since past 2 trading sessions, we have been seeing selling pressure from the higher levels. And Nifty, Nandita, was trading within that range of 18,000, 18,100 to 17,600. So since it had reversed from the upper end of the range, the lower end of the range was expected. And that did come. In fact, it did break the lower end of the range as well in yesterday's trading session of around 17,600 and closed to the levels of 17,554. Now, one thing to watch out for in today's trading session being an expiry, a monthly expiry as well, Nandita, is that at the lower levels, I mean, there can be definitely a good selling pressure at the higher levels because we have been seeing selling since past couple of trading sessions, and there are shorts in the system as well. Then looking at few of the parameters, important one is that, the net longs as far as the FIs are concerned, that's below 20. So that's one thing which is looking oversold. I would not say it is at the lower end, extreme lower end, but then yes, it has entered the lower oversold region. Second is the PCR. I mean, if you look at the PCR of both Nifty and the Bank Nifty are at 0.54 and 0.45 respectively. Now that's also an oversold. It has in fact reached the extremes of the oversold region, both of them. So looking at these two things as well as the kind of support it has got technically around the levels of 17,450-500 range on Nifty and 39,700 to 40,000 range on Bank Nifty. It appears to me that on the expiry day today, if at all there is a dip towards these levels, right? The strategy should be buying at those levels, being an aggressive trader from an intraday perspective in anticipation of a short covering from those levels. In today's trading session, I don't see Nifty actually, closing below 17,450 range, and Bank Nifty shouldn't close below 39,500. So if at all there is a dip, one should definitely buy with these two levels as a stop loss and in anticipation of a bounce back from those levels. If it opens up in positive, then wait for it to dip. Do not jump on directly looking at this setup. But then yes, on dips definitely should be bought on because the readings are also from the expiry point of view.
Right, so buy on dips is the call. But if you talk about the Adani group of shares, they saw heavy selling in yesterday's session. Adani Enterprises shaved off somewhere around 10%. How much more downside to this, Jay? I know there's been a lot of news flow around this group of companies, but what should one do if one is invested in Adani Enterprises now?
Okay, if one is invested in Nandita, then I would say one has to wait really long. Okay, I think that whenever this kind of things happen and whenever global media or the global agencies and then many domestic agencies are also now after it. So my view is that close down. So, for the investors, my point of view would be that definitely it would see some consolidation. I would cite an example, okay, a few years back, I would say of Sun Pharma, which had seen a good run up, and there were many investors or traders interested in Sun Pharma. The stock went to almost 1,000 plus levels in 2015, 2016, I suppose, around in that year. And once it had actually become India's number one, thereafter we saw a sell-off until the levels of 350. And now Sun Pharma again, climb back to those levels. So you see, I'm not saying that it's going to take 5-7 years or it will take 5-7 years only for the stock prices to return to those levels. If the company is strong, which I believe, yes, the overall group seems to be strong, there are some issues which are now being discussed. And many agencies, even regulators, RBI, SEBI, everyone are looking after it. So this will take time to resolve. I mean, so by this I would say that the stock would remain volatile, right? So I think that in this kind of news flow and events, a trader should definitely ignore it because you cannot just judge what's going to happen tomorrow since it has been tracked so much. And as far as investor is concerned, I would say that yes. Why did I give an example of Sun Pharma? That was just one example. By that I would say that till things don't settle down, the stock prices won't be back to your all-time high levels. So it will take some time to consolidate, conclude, and thereafter, based on the earnings and based on the technical setup, the momentum will come. Till that time, it's going to be range bound. It's nothing much to look into it.
Right, wait for the dust to settle. That's the call from Jay on Adani Group of Companies. Sticking to Adani group of companies, Orion Cement has said that its MOU with Adani Power Maharashtra has been terminated. The stock, Orion Cement, hasn't really done much. It is down somewhere around 2% for the week. And over the last 1 month, it has shaved off somewhere around 9%. What would you suggest or what would you advise investors to do with a stock like Orion Cement?
A couple of years back, I had a buy recommendation on this, and I had recommended on various the platforms, and the stock did well as well. So, and now I think that the overall technical setup, if I have to talk about, is not looking that bullish. So definitely at these levels, if someone is invested, should definitely exit. I think that the stock will take some time to consolidate and maybe correct as well to the levels of 100 to 90, and thereafter form a base. So it's trading at around 117, still almost 30 points, is nearly around 20-25% downside risk is still there in this stock. For the long term, the overall outlook on the cement sector is positive, right? But for the short term, as far as this stock is concerned, the outlook is negative.
Right, short-term negative, but from a long-term perspective, cement stocks are looking good. What are your thoughts on Hero Moto? If you look at the auto basket, it hasn't done very badly when it comes to the third quarter earnings season. Hero Moto is in news as the company has set up some public infrastructure charging stations in Bengaluru and two other cities. So over the last 1 month, I think the stock has, shaved off somewhere around 9 to 10%. But going forward, do you think the outlook is positive on this stock?
Yeah. For the long term, Nandita, I would say yes. The outlook is positive for the stock, and one can stay invested. For the short term, there is no such momentum, positive momentum or the chart pattern, I would say, or the reversal, I would say, as far as the prices are concerned on the charts, wherein I can say that yes, one can buy this for at least a couple of trading weeks or months, and one can see these targets. That's not the case as far as Hero Moto Corp is concerned. As far as two-wheelers are concerned, that's the case in TVS Motors. I mean, TVS Motors has clearly broken out from a falling channel. The stock has been in an uptrend. It's been an outperformer, in fact, in the entire auto sector, especially in the two-wheelers pack. So TVS Motors comparatively, I would say, is better than Hero Moto Corp technically, fundamentally as well. It's been growing quite well. Outlook of Hero Moto Corp for the long term is positive. For the short term, I would on the charts, and one can buy and play out the momentum on the long side or short side.
Right, let's take on board some of the queries that are trickling in this morning. The first one is coming in from Prabhu, and he has a query about REC. He wants to know your long-term view on this stock. Now, the stock has been under pressure, but it isn't really very far from its 52-week high. So, what is your call on REC now for the long term?
No, REC, I would say yes. This is one stock technically which has got a very good chart setup, chart structure for the long term as well, Nandita. I mean, this stock has been consolidating since almost 2010. In the range of say 145, 150 on the upside to say on the 60 rupees on the lower side. It's been almost 12 years of long consolidation. Now I think the stock is now ready for a takeoff on the upside to provide a breakout on the upside. It has yet not provided a breakout, but I'm anticipating this just not because it has completed 12 years of consolidation, because the momentum indicators on the monthly charts, Nandita, has been providing a good positive divergence, and it's well into the buy mode and above the zero reference line. The volumes activity has also picked up since last couple of trading quarters or years in the entire phase of this 12 years consolidation. So looking at these I would say parameters, I think that yes, this time around the probability of a stock providing a breakout on the upside is quite high. Hence, for the long term, if someone is holding, should definitely hold this. If someone wants to buy fresh, one can start accumulating this stock as well. I mean, once this range of almost 80 points on the arithmetic scale is broken out, you could see those levels of 200 plus levels as well for the long term.
Right, hold for the long term is the call. The next query is coming in from Neeraj Garg, and he wants to know your thoughts on SRF. Now, over the last 1 month, this stock has gained somewhere around 8% or so. Do you expect this upside to continue going forward?
Well, see, SRF has been a very strong performer, absolutely. Fundamentals have been really good. The earnings have been improving. The company has been growing. Technically, too, Nandita, we have seen this stock doing quite well. Now, it has reached quite at an upper end of the level. I would say that, this stock's upward momentum would continue. There is no sign of a downward reversal as yet. On the lower side, 1990 to 2000, if you can round it off. So 2000 level is to watch out for on a closing basis. Still, this stock holds on to those levels. So medium to short term outlook would be positive or sideways, and the trading strategy would be buy on dips targeting the upper end of the range, because the upper end of the range is 2800, Nandita. So the stock is now stuck in a range of 2800 to 2000. The best strategy should be buy towards the lower end of the range, as the risk reward would be promising, or it would be favorable. But if 2000 levels break on the closing basis, then yes, for the medium to long term as well, the trend might shift from up to down. So that's the crucial level to watch out for going forward. Till that holds, keep trading on the long side.
Well, keep trading on the longer side, because the chart setup for SRF looks positive. Next query is coming in from Abhilash, and he wants to know your thoughts on Laurus Labs. Is this a time to accumulate? Now, this stock is languishing near its 52-week lows. Should one buy into this weakness?
See, the fall, Nandita, has been quite sharp. I mean, from 620 to 320 almost, right? So that's a straight 300 points cut. It's a unidirectional fall without any significant bounce back. We have seen this kind of a fall. So technically, yes, the stock is looking too oversold. It's been to the life low oversold readings which we are seeing in this stock, right? And we are seeing some good positive divergence happening on the daily chart as well. There is no such price action that's been seen, along with the momentum, one should actually look at the price reversal as well, and both when in favor, one should definitely trade. So Laurus Labs is a good candidate for a bounce back, I would say. Yes, but then the bounce back will be confirmed above the levels of 330, Nandita. So about 330, if Laurus Labs is trading, say in the next couple of trading days, then yes, one should definitely go long. Thereafter, it can be huge short covering of this entire 300 points fall, maybe of 10-15%. But about 330 is the ideal level to enter longs. Till then, one can just wait and watch.
Right, so that's the call on Laurus Labs. The next query is coming in from Vignesh, and he wants to know your thoughts on Muthoot Finance for the next 2 months. He wants to know if this is the right time to averages. Now, this stock is also very close to its 52-week lows. What would you advise him to do?
No, I would say that here, despite the stock is near the lower 52-week lows, I would say avoid on the long side. In fact, one can definitely exit if someone is long and one can look out for the shorting opportunities as and when this stuff bounce back. Because the chart structure is negative, after a significant fall, it bounced back. Thereafter, it's been consolidating, and this consolidation is expected to break on the lower side. The momentum is also not in favor of the bulls; it's favoring downside. And I think that the consolidation which happened after it took a pause happened in the range of 1200 to 900, and then it is reaching towards the lower end of the range. So I think this 300 points range is likely to get shifted on the lower side, and this stock can see much more downside from these levels as well. On the longer term chart structure as well, this stock is reversed. So my take would be if someone who doesn't want to go long and doesn't want to go short, then avoid. And the aggressive traders can watch out for shorts. Good opportunity for shorting this stock as well. The stock is overall weak.
Well, the stock is overall weak. The next query is coming in from Rahul Kathuria, and he has a query on Easytrip. I think he bought it around 53 rupees, and he wants to know whether he should hold or sell. What would you advise him to do? The stock is languishing around 44 levels or thereabouts.
Well, this is one of the recent IPOs, or maybe latest IPOs in past 2 years, which we have seen has performed quite well, despite not getting much, I would say, premium from the listing point of view. Despite that, the stock has performed really quite well. Like, for example, if I have to cite Angel Broking. So, both of these, maybe, talking about Easytrip, it has given good returns to the investors, the traders, and now is the time to actually exit from the stock, as the chart is showing weakness, the momentum is showing weakness, momentum is showing negative divergence on the weekly charts, and on the daily chart structure as well, it seems to be forming a sort of a rounding top pattern. So overall, technical setup for this stock is now looking negative, and it's a very good level to exit also. I mean, so it's not that too late.
Right. The next query is coming in on Reliance Industries. Ashok Kandukuri has written in, and he wants to know what to expect from Reliance Industries in the short term. What would you say?
Well, this is one stock which bounced back quite well in this bounce of Nifty, short-term bounce of Nifty, or from the lower end of the range which we had seen, Nandita. And now I think that Reliance is definitely a stock which has got a good support around the levels of 2300. So around the levels of 2350, 2340, one can definitely buy on dips should be the strategy for the short term, placing a stop loss below 2300. Those are the crucial support levels from the medium term perspective as well for Reliance. If 2300 levels break, then it can be a major reversal, else the stock can bounce back from lower levels.
Right. Moving on to the next query then, Abdul has written in and he wants to know your short to medium term thoughts on dollar industries, whether it's time to average, because over the last 5 days, the stock has shaved off somewhere around 10%.
The overall outlook for dollar industries is negative, I would say, Nandita, and the chart is also looking weak. For the longer term, the chart is definitely positive. For the short to medium term, it's negative, so one should definitely avoid this from the short to medium term perspective. I think there is much more correction left out here. However, short term, the stock is a bit oversold on the weekly charts, but then the outlook is negative.
Well, then this wraps up our query segment for today. We're running out of time. But before I let you go, Jay, please leave us with some stock recommendations for our viewers for this morning.
Definitely. See, I have a buy recommendation on IEX. Nandita, IEX looks good from the short covering point of view. I mean, this stock has been this stock has provided a good breakout from a downtrend line resistance with a good positive divergence. Good short covering as well since past couple of trading sessions. The stock closed somewhere around the levels of 145. It is expected to bounce back till the levels of 155, 160. So 155 to 160 is the target on IEX. One can place a stop loss at 140 and go long on this. That's the first buy recommendation. And second buy recommendation would be on Dabur. FMCG looks positive, so 533 is the close of Dabur. One can go long on this. This is also one short covering candidate. One can place a stop loss below 527 and target 543. One short side stock which I have got is on RBL Bank. I mean, banking or BFSI segment has been weak. RBI is looking weak, and one can go short on this as well. The resistance on the upside is somewhere around 157, 158. With that as a stop loss, one can go short on RBL Bank, as the stock is expected to see a significant downside at the levels of 145 to 143 in the short term. So I've got two buy ideas and one sell idea.
So 2 buy ideas and 1 sell idea coming in from Jay this morning. Well, on that note, thanks a lot for taking out time and joining us this morning, Jay. Look forward to having you again on the show sometime. Well, with that, we are completely timed out, and this is a wrap on this edition of Morning Trade. But don't go anywhere, because coming up next is Opening Bell.